Joining us now is Ben Silverman of Propagate. He was previously the co-chair of NBC Entertainment. Ben, always good to talk to you. Welcome.
Thank you, Sarah.
So I guess it was a relief on the subs number after Netflix's loss. Who's winning the streaming wars right now? Where are we?
Well, it seems like everyone's losing. I'm kind of surprised, like you hit your numbers or exceed your numbers and, the world doesn't reward you, and or you miss your numbers and the world doesn't reward you. But overall, the long-term trend of direct-to-consumer and the relationship that these big companies can now have with their audience and consumer is an invaluable opportunity. And how they unlock it will be really interesting over the coming years, whether it's going to be the introduction of advertisers who've really been left out of the streaming ecosystem other than Peacock, or whether it's going to be new ways to monetize the content off those streaming platforms down the road. But in general, I think what is clear is that library content still has massive value, and the pulling of that content onto their owned and operated services, whether it's NBCU and The Office or it's Warner Brothers and Friends.
Which is yours.
Yes, I got to mention it. And is incredibly valuable. But also the big tent studio investments made in IP, whether it's Disney's investments in Star Wars, Pixar, or Marvel, have real value and can be unlocked and can drive subscriber.
But at what price, Ben? Is there a sense that what we saw in terms of the big bucks for content is just going to be scaled back massively with these stocks? Netflix's stock down, 70% or so from its highs, 60%. And the discipline that the market is imposing on some of these streamers with the models changing, what that's going to mean for how much you and others get paid for content.
Well, I think that they can't stop investing in content, right? That is the essential fuel for these platforms. But do they need 20,000 people to do it, right? I think what's one of the interesting things about the shift that technology was supposed to unlock was about the amount of infrastructure and people you needed for that content to be made and then distributed, and then the thought being that streaming would create a kind of technological advantage. And it feels like they've only been hiring into the technology instead of actually using the technology to kind of save on the cost side outside of the physical content. But I really believe in the value of content increasing and growing. And I think it's also just multiple forms of content. The broadcast platforms knew early on they needed one price point for daytime, one price point for the morning, one price point for late night, one price point for prime time. And I think that the streamers just all went heavy into the big primetime content and didn't spend the money across the slate in a wise enough way, because a consumer doesn't differentiate between Dancing with the Stars and Game of Thrones about their pleasure experience or their viewership, but one is 10% of the cost of the other.